And Thomas, it's great to have you to weigh in on this. Would you agree, first of all, that it represents an error by the Fed to have been in this position with regard to inflation? And I guess, does it matter how we got here in terms of what they have to do now?
Yeah, I mean, it's a fair point. The Fed was behind the curve. They should have been at least removing a lot of that accommodation starting in 2021 at the latest. And they delayed throughout the entire year, and therefore we ended up with the inflationary impulse that we have, and it's become more embedded. And yeah, it wasn't all supply side by any means. I mean, with the fiscal expansions and the monetization of the borrowing there. So yes, that was a mistake. But we are where we are, and now that inflation is embedded, and the Fed knows it, and they know they have to get that down. From the 8.3, which is actually becoming more and more difficult with time. So they are raising rates, and I think the 4.6% number they're put in their dot plots or whatever you want to call it are realistic and probably where they will be. The question then will be, what will they do in 2023? And I suspect they'll have to go a little bit higher at least, and that's going to put continued pressure on the economy. And I think the odds on inflation are pretty high.
Yeah, the 4.6, of course, was the
odds on recession are pretty high.
Yeah, gotcha. The 4.6 is the kind of committee's collective projection for where the Fed funds rate has to get to, as you know. So that seems, it's not too far away from here, a little more than 1 percentage point higher from here, but it's looking like they'll get there in kind of a hurry. I mean, it seems that the Fed has concluded by what they're saying and all the signals they're sending that they don't really see an alternative to significant further weakness in employment as a means to get inflation under control. Does that remain a valid approach? In other words, can they not essentially get rates to a certain point and then see exactly how the data come in from here? Because they do await that 2 or 3 months of more friendly inflation numbers.
Well, that'll be a decision they have to make, because I do think they're going to have to get tighter than 3%. Most economists know that. And 4.6 by the end of the year is a likely number. And I think that will slow the economy. But whether it's enough, given the amount of inflation, above 8%, and given how much it's embedded, I think the possibilities are even more. And then, so relying on a modest or continued increase in unemployment to help with inflation, I think is a low probability. I think they're going to have to tighten more, and I think they realize, although he didn't say it, that they're going to have to suffer a recession to get this down, and it's going to be painful, as Powell said, and there's no way to avoid it. I mean, this is where they are. They've got far enough behind. Now they're in catch-up, and there's dangers in catch-up of going too far. That's a risk they're going to have to take, apparently.